1 minute we're bullish, 1 minute we're bearish. With the information and data report from the labor market and NFP, lots of catalysts out there, lots of emotional news that the market makers can use to jerk us around. But as a price action trader, my eyes will always be on the charts and the levels and money magnets. What it looks like to me, as far as what happened on Friday, was an attack on liquidity. We had a potential double top with above 649.5 level. There was liquidity up there. The next day on Friday, last Friday, the market makers gapped up there, took out any potential stops and pushed it downwards. You can see on the 15-minute chart, broke down my 649.5 level, rejected right from my 651 level, broke down 648, going as low on the day at 643.3-ish before just consolidating 4 hours. But we ended up with a red candle. Question now is, are we bullish or are we bearish? Well, it depends a lot, to be honest with you, on what the market makers are going to do this week, because we do have PPI on Wednesday and CPI on Thursday. So with the VIX showing signs of bearishness and SPY once again just flirting with all-time high levels, there's a good chance we'll have some low volatility until PPI and CPI get released in the morning, and then hopefully it'll carry on through the intraday and give us some level-to-level moves like it did last Friday, some beautiful ones. So yes, it does depend on what happens this week, but I'm looking at this chart right now and I have to give you guys my opinion. And based on how it attacked liquidity, there is a good chance that we can pull back a little bit more. Why would the market makers attack the liquidity if they don't plan on pushing the SPY a little bit lower? Just my opinion, and I'm always ready to be wrong and cutting my stop loss if that's the case. Although I'm not swinging anything, I'm just saying it does look like it wants to push down a little further, and I would be right if support levels at 646.5 and 645 fail, because if those levels fail, could be bearish, pullback time, get back below the 5 DMA, and we also break back below this uptrend line. Now you guys can see right here that the market makers attack liquidity. We had 3 tests, August 1st, August 20th, and August 21st, giving us this uptrend line. They gap below it to attack liquidity before pushing it upwards. And then we had the potential double top where they gap above it, attacking liquidity. Now they push it down. That's why Unco is saying there's a good chance we could drop a little lower to the downside. In other words, Unco is trying to follow the traps, hence the thumbnail, follow the traps. So if I'm right and we break down 646.5 and 645 either Monday or Tuesday, it's a good sign we're going to drop it a little bit lower before we potentially get the real move from PPI and CPI. Now, I have to say, September has an average tendency of putting in the top. So we have CPI coming up this week. We have FOMC next week. So watch out for one of those 2 events that can possibly put a big top in for SPY and send us on a multi-day, maybe multi-week move to the downside. So let's recap one more time. Uncle believes in following the traps, and the trap could send us lower. If I am correct, 646.5 and 645 must fail to break down this uptrend line. Look to short. If that happens, we should get $5-10 move to the downside. Now, if Uncle is wrong, because Uncle cannot see the future, I'm only going based on the traps and the chart. If I am wrong, 648 and 649.5 must clear once again to put 651 and 653 and also 655 or higher in play. Remember, it's not about being right or wrong. It is about reacting to the price action and respecting our stop loss. And Uncle gave you guys the levels and setups. Now it's all on you to bring it on home. Now, moving on to QQQ, looks like it did attack liquidity. Very similar to the SPY. Attack liquidity there, attack liquidity here. Now, they're not doing it traditionally. Usually they attack liquidity, they do it traditionally, they break it down or break out intraday. But in this case, all they did was gap down, attack the liquidity, then pushed up. Then they gapped up, attacked the liquidity, then pushed. Now they're possibly looking to push down. Follow the trap. If I am right, 576 and 574.6 must break down tomorrow or Tuesday to be bearish and send this trap move downwards, maybe down to 567 or 565.8, around that area. Below that would be official breakdown of this triangle pattern. Put in 563, 560.5 or much lower in play. That's if we are bearish. Breakdown 576 and 574.6. Follow the trap. If I am wrong, 578 and 580 must clear to send us to new all-time highs with 582, 583.5 and 586 in play. Here is NVDA. We had an inside candle setup, and I have to say say the chop ended bearishly. As long as below 169, I am bear bias on NVDA. Break it down 168, break it down 166, 164.5 as support levels would be bearish follow through. It should give us another $5 to $10 move to the downside. Now for this bearish setup to invalidate 169 must recapture to put 171 and 172.5 in play. I will only be bullish again on NVDA if 172.5 can recapture. Here is Tesla looking bullish, NVDA looking bearish, but Tesla is looking bullish. And if there is bullish follow through, I need to see 354 and 355.8 clear to put 357, 360 or another $7 to $8 in play to the upside. If we are to be bearish, I will not look to short or recommend to short unless 347.5 fib level and the 346 and 344 buy zone can break down and send us back down to the 20 daily moving average around 337-ish. Below the 20 is when Unco would be bearish again on Tesla. IWM looking kind of bullish with this new all-time high close, but it is a doji followed by coming after a big body green candle, so we have to be very careful here. Bullish continuation or bearish reversal. If it's a bullish continuation, 238, 239.5 and 241 all must clear and it'll be a bullish continuation. Could be a big one, but if it's not and it's a reversal, below 238 is a must. Staying below that and breaking down 235.5 and 234 will be your bearish follow through. Those levels fail, have confidence and look to short with 232, 230 or much lower in play. Here is Apple. You have to be careful with this one because it had a decent body green candle. Decent body, not a big body, decent, followed by a doji. The way I trade doji is because those are chop candles. So the way I trade chops is I identify the range and we watch the break of the range. Just like with the doji. And the range is 241.3 down to 238.5 with 240 as the equilibrium level. So if we want to be bullish, 241.3 must clear to send us to new all-time highs. And if we are to be bearish, 240 and 238.5 must fail as support and it should send us a lot lower to the downside. So Apple is chopped between that level, 238.4, 238.5 up to 241.3 is chopped. And last but not least, here is the VIX. We got to be very careful with the VIX. It is looking bearish, and here's my fib levels back. It is looking bearish, rejecting from there, and it hit that 14.7 level once again. So if the VIX going to be bearish, that means it's a good chance SPY is going to be low volatility and possibly creeping up to the upside. But if the VIX is going to bring back volatility, 16, 17.5 and 19 must clear. Those levels clear, it's going to be a happy trading day for all of us because we're all master traders. We know what we're doing. But around this level, below 16 or 14.7 fail, be very careful. I wouldn't expect much volatility. Take what the market gives you, whether it's a level move or less. If they give you more, great. If not, we're going to trade like money magnets. All right, so I love y'all. That's what I have for you. I hope you found value in the video. Let's kick some market makers behind this week. And yeah, peace.